We're putting the meaning of today's Fed action in focus these 2 hours, the rate decision a little bit more than 2 hours away. What, if anything, does the rate cut, a potential one that is, mean to investment banks? We're going to put that question to the head of one now. Peter J. Solomon joins us in the studio. He is founder and chairman of his namesake firm. Peter, we're always glad to have you in the studio. Thanks for coming in. If the Fed cuts rates, what does this do, if anything, to the appetite for M&A?
Well, I think anything that will stabilize the market and improve the markets will help M&A. There's going to be a lot of consolidation in many, many industries, and it's very difficult to do deals when you don't know what your stock price is. There's been so much volatility. So anything that will create less volatility would be good for the M&A business.
Overall, what grade would you give the government? And by the government, I mean the Fed, the Treasury, the rescue plan. Do they get an A? Do they get an F? Somewhere in between?
No, they get an F.
They get an F.
They've been
F.
late, ad hoc, idiosyncratic. I think they've rescued everything they can try to rescue. I actually expect the Mets to apply for a new relief pitcher for next year.
I'm going to leave baseball alone, especially since neither of your two teams are in the World Series.
Truly.
So the government, in your mind, has clearly overstepped its bounds.
No, I don't think it's overstepped its bounds. I think what it's done has been late and, as I say, eccentric or idiosyncratic. And it has not been consistent. I defy almost anybody to list all the actions that the government has taken or is thinking of taking at this moment. It's been a total failure of leadership.
You said in the past that the government is already in the merger business, so maybe feel a little competition, at least as far as the financials are concerned. Is that a good or a bad thing in your view?
Well, I think it's terrific. It's going to pose a lot of very interesting issues for the Federal Trade Commission, the Department of Justice in the coming several years, and whoever is president is going to have to deal with that. The government is, in essence, forcing and creating mergers in the financial industry, and it looks like it may be inducing them or helping them in the automobile industry. So how far are you going to extend that, and what's the antitrust policy of the country going to look like?
Speaking of, it's not exactly a forced merger, but it was a change in status. You now have Goldman Sachs and Morgan Stanley, as of late September, no longer investment banks. They are under this traditional banking structure, if you like. That's their new label. What has that done, if anything, to the investment banking landscape?
Well, it's been wonderful for us. It's eliminated two of the major investment banks.
So you don't think they're functioning business as usual? Something has fundamentally changed?
I think the markets have seen that. I think the reason you see the markets under Goldman Sachs and Morgan Stanley under such pressure is I don't think anybody understands the significance of the change from being an investment bank, high risk, unregulated in essence, to being a regulated industry dependent on credit, particularly when you begin to see that the Fed and others are putting pressure on how much speculation and risk-taking you can. I think their models have not yet been determined, their financial models.
So is this going to hurt them, though, when they compete with the likes of you, a specialty firm, when they're trying to get clients, when they're going out, proposing deals perhaps, or maybe serving as an advisor? Is this going to hurt them?
I certainly hope so.
Well, obviously, but do you think it will?
Yeah, I do think it will. I think they will become commercial banks, and I think they'll have problems differentiating themselves from other commercial banks and providing the service and the attention that folks like ourselves live by.
A little bit of an off-the-cuff question. Should firms that get taxpayer money, should firms that participate in this rescue plan, should they be paying bonuses this year?
Well, that's a wonderful question. You now have the federal government as your partner. You have to pay bonuses to people to get them to work, but you do have Henry Waxman as your overseer. I don't think anybody quite understands the implications of having oversight by Congress and the administration of your business in such an intimate way.
So we're living in historic times. You think people are obviously going to look back at this point and say this is where things changed?
I think they're going to say, wow. I think this is a period that is like the post-Depression period. I do think it's like the 30s. I think the next president's going to have to look at the economy the same way the president of the United States looked at it in 1932.
Since you brought up the president, the idea of a new president, which, as we know, we're about a week away from voting, actually less than that, what happens, no matter who wins, to taxes in this country?
Well, first, I think it's great that there's going to be a new president, whoever it is, and I obviously have my pick, who's a Democrat.
Not giving any names.
I think the tax discussion has been somewhat idiotic, particularly by McCain, frankly. The discussion of redistribution of wealth in terms of the tax code one has to understand that the tax code is progressive and redistributes wealth every day and makes choices every day. We make choices on charitable deductions, home, which we all know now, child credit, ethanol. The whole tax system is a terrible system, and if anybody could change it, it would be terrific. But it is a progressive system which redistributes wealth by its very nature.
Peter, before we let you go, we can't have you on without asking you about the retail industry. This is one of your firm's specialty. You've said in the past you see a lot of consolidation coming. I'm interested, is it cross-border? Is it a matter of size? What kind of trends can you just give us a little insight into?
Well, the first thing is the retail business is awful generally. It stopped on Labor Day. It took the market about 5 weeks to figure out that it stopped on Labor Day. It did stop on Labor Day. The cold weather will help it, and lower gas prices will help it. But the retail business, you're seeing terrible earnings announced today. In the merger area, yes, there will be continued consolidations of people, of firms in the same industry. Will it be cross-border? Less cross-border initially than it will be within the United States. But you'll see numbers of companies that are in like businesses merge, and they will merge to survive.
Any clues? Any, not saying what will happen, but ones you have on a short list, watch
Not
list.
A chance
Not a chance.
I would
All
say
right,
that.
well, we have to try. All right, Peter, thanks very much.
Thanks, Deidre.
Peter J. Solomon there, founder and chairman.